We have said this before and we'll say it again. Do not panic. Seriously, unless you own something that you think could go to zero, and no, every stock will not go to zero. Unless Jesus comes back, and then it probably will not matter what you own. Hey, just had to lay that out there in case as a case for why they could. But short of that, you'll need to come back down from the ledge. Look, we've been saying basically nothing except for our strategy to sell calls and buy puts. If you did that on your long stock position, then sit tight and relax. If you own the puts on stocks in your portfolio, you can do either of two things. If stocks just have you very nervous, and you can exercise the puts and exchange your stock for cash. You read the article by James Altucher in which he lays out 7 reasons for why stocks can and will eventually go up and not down, then you may want to take a look at selling your puts with the VIX through the roof. Also, we've advocated that you own the VXX. That's the ETN that tracks the VIX back when it dipped under 25. You should have sold the VXX when it hit 37 today, as we pointed out that when the VIX has touched 40, it usually comes back hard the other way. Keep in mind that the VIX and the VXX don't trade with the same value, meaning that when the VIX was 37, the VXX was at 32.92. So you can watch the VIX to know when to take off and put on your VXX. If you're up in your puts and VXX position, consider taking them off and looking to start deploying your capital. If you look at a chart of any major average over the last 40 years, stocks are materially higher than they were 40 years ago. You'll always see times when it's hard to own stocks. That's why we've been doing our covered call strategy that we laid out for you, in which you create or raise the size of the dividend in stocks that you own, as long as you're comfortable keeping that stock for long periods of time. The goal of the covered call is not to be called away. So what's happening now is how we wanted things to go, so that we can sell more calls after expiration. The August 290 call that we sold against our AAPL for $1,030 can now be bought back for $4.40. That's better than 100% rate of return on that trade. You could either wait out the rest of the time until August or buy it back and sell another strike in August, like the 270 for $9. Since we bought the stock at $271.10, you'd be even on the stock, but plus $1,490 minus commissions on the trade for a return of 5.5% in under 60 days. If you're nervous about the market, you can go that route. For now, we'll leave the call short and let them go in our favor, eroding the value of our short call option so that we can capture more of the $1,030 we took in. Whatever you do, don't panic. No one ever made a dime panicking, and today will not be any different. Besides, if you're short put spreads like we are, the 55.50 Freeport Macran put spread still isn't in the money. You have another $2.50 before it is, and the Chesapeake put spreads are only in the money by about 50 cents. But, and here's why we like selling put spreads, as it gets closer to expiration, you can roll the position. That means you'll buy back what you sold and then sell another put spread out and down. You'll buy back July and sell the August at a lower strike. So, on Freeport, you would buy back the 55.50 and then sell the 50.45 in August. If your July put spread is in the money, then you should be able to sell the August out of the money put spread for a credit, remaining profitable on the trade, all without panicking. If you have specific questions, you're more than welcome to mention us on Twitter, and we'll include our answer in the next segment, like the work we did yesterday for Stock Addict and Net Sound Off. Thanks to those guys for the mention, and special thanks to Stock Addict, who flagged our STST call before they got a bid from Boeing for the whole company. Not bad in this market. Have a great day. If you got long STST, don't forget to take it off, as the trade is over. You've made your profits. The Anthony Scaramucci interview is now available on the website at www.magnumopusfinancial.com. When you get there, just click on the picture of James, Patty, and Jared, and you'll see all 5 episodes with Anthony Scaramucci near the top. If you search on iTunes for Magnum Opus Financial, it only shows the first 3 episodes of America's Favorite Traders, so you'll have to subscribe to the show on iTunes, and it'll give you the option to select the episode you want to get them all. If you click on the iTunes link from America's Favorite Trader page, it gives you all 5 episodes to choose from. Don't forget, you can listen right from our page or download the episode as an MP3 so you can put it on any media player. Thanks again for tuning in, and we'll see you tomorrow.